We are back. The NSE has just closed for the day. We've seen about 8 million shares traded in Safaricom. Then other interesting trades that we've actually seen are two, Kenya Re and Scan Group. Kenya Re, 5.2 million shares have traded. The stock is now down 1.38% over the day, and it's trading at 2.85 shillings. Now, this is interesting because just a few months ago, it had actually issued a bonus share, and it had corrected, and the theoretical price that we were expecting it to be trading at was at about 3.5 shillings to 4 shillings. It's now at 2.85, and we've seen a huge trade of 5.2 million shares go through the counters today. Scan Group, 1 million shares, another stock that hardly ever trades. We highly suspect it's a foreign trade, but we will give you details later on of the movements of this stock, so whether it was foreign or it was local. So two key things happening. Kenya Re and Scan Group are two trades that we hardly ever hear of. We've heard about them today. We'll keep you updated on what happens there. Before we took a break, we're looking at sub-Saharan Africa, looking at Ghana, looking at Nigeria, looking at Egypt, looking at Kenya. Kenya is now down about 15% from the beginning of the year, as at last week on Friday. Some of the markets that have done well within the region are Uganda up 3.8% and Rwanda about up 0.8%. Charles Miano is an equity analyst with Nabo Capital. He covers these markets, and you were giving us your views with regards to foreign investor sentiment. Before we took the break, you give us a very good overview. You say every country has its different structural dynamics, every investment case it's different, so it's not really a like for like, so to speak. But then tell us, what does foreign investor sentiment look like across the different markets, and how are trading volumes also looking like in the different markets? Are they going through the similar experience that we're having in Kenya today?
Yeah, we had, for example, we had a call with Ghanaian brokerage firm, and they did mention that the volumes are considerably lower as compared to maybe a couple of years ago. And I think the sentiment around it is just not touching again on Africa, but looking at overall in the margin and frontier market space. And I was looking at some stats. These are based on, if you look at, for example, the outflows, total outflows over the year within the emerging markets have been about 30 billion. And last year,
$30 billion, that's
$30
a lot.
billion.
Okay. Last year?
I'm sorry, just even last week, just touching on last week, we saw some outflows of about 3.6 billion.
Okay.
And what we're saying is a lot of outflows have been from equities, and the inflows that we've seen is in hard currency fixed income assets. And so by this I mean the Eurobonds.
Okay.
So the Eurobond space has done significantly well. And if you were in the market, let's say the beginning of this year, then you did quite well. For example, the Kenya 48s, if you invested at the beginning of the year.
So these are papers maturing in 2048?
Yeah,
okay.
Yes.
All right.
So the Kenya 48s, if you had invested in the Eurobond, and the minimum is $200,000 to invest, you will have been up about 24% on the dollar.
Okay.
Yes.
Minus 24%.
Plus 24%.
Or plus 24%, and your minimum investment would have been 20 million.
Yeah, 20 million Kenyan shillings.
That's a good return.
So we've seen overall the Eurobond market pick up quite a bit, and I think investor sentiments right now, especially given that funds are being looked at from a global level and a global perspective, where investors are saying US and China trade tensions. They're also seeing the slowdown in the economic growth, especially when it comes to Europe and also the global environment. And all these things are weighing on them and how they allocate capital. So we've seen a lot of allocation of capital towards hard currency and also some local currency fixed income. For example, if you touch on Egypt being an example.
It has attracted a lot of money to the fixed income market there.
Yes.
And it has done that. What about other asset classes such as gold? Has this also seen an inflow of funding? Yeah.
So gold has done quite well this year. I think on the back of what we usually see is gold is seen, one, as an inflation hedge, and also as sort of like a protection against currency in regard to the direction of the dollar. And also we've seen some sort of volatility, especially when it comes to Brexit, for example, where there's uncertainty to when they're all coming out. They've been postponing the dates since the passing in 2016 that they were supposed to move from Europe. And with that, we've seen the pound sort of have its own volatility, and also the euro as well. And so we've seen gold actually go beyond its resistance levels. Its resistance level was about $1,250, and it's going upwards of that. So gold is actually doing quite well from maybe a 2-3 year. It's within a 2-3 year high. Yeah. So I think investors are preferring to sort of use gold as a hedge, as I mentioned.
Gold as a hedge, and then redeeming their funds and getting the funds out of your traditional asset classes. Really, that's equities.
Yeah.
So what you're saying, in other words, Charles, what's happening in Kenya with regards to getting a 30% low on our turnover, that's also happening in other markets. So it's nothing peculiar to us. Yeah. So then the question is, I'm an investor, I am seated in Kenya. Yeah. If, for instance, today I came across 100 million, I don't know from where, and I'm not corrupt, and I gave it to you as a fund manager, would you allocate that to Kenya, or would you allocate it to other areas? And conversely, where would you allocate it? Would you put it in equities and fixed income? Because our universe of investments is actually pretty limited.
Yeah, I think for us it'd be definitely diversity,
okay,
in regard to allocation of our capital, and also looking at various asset classes. There are asset classes that are doing fairly well. If you look at fixed income space, especially if you look at local currency, and now your view is...
So that's the bonds that the government issues?
Yes, within the different jurisdictions. And what we're saying is, you for maybe 1 year papers, for example, you could get upwards between 12 to 16%. Actually, although it's 20-something%, but that's, for example, touching on Zambia, which again, at the current moment is a bit volatile, given their current economic status.
But volatility, that's where the money is.
Yeah, really. Yeah, high risk, high return. But however, it's still, for our perspective, we still want to give you the best return, risk adjusted. So allocations towards fixed income will be a good play. Even allocation towards Eurobond, because we've seen the narrowing of the US spread, given the fact that there's been a move now from tightening to more of an easing policy, where we've seen the United States Fed sort of cut their policy over the last 2 meetings that they've had. And also we've seen the same sort of sentiment across different markets across the world. So that means you'll see sort of like a tightening on the spreads, and whenever we do know when yields do come off, we do see some market value gains.
In terms of prices?
Yes. So we do think there's value in fixed income, we do think there's value in the Eurobond space, and in addition to that, we do see value, especially with some equities which are quite discounted. And with that,
do you have a sense of what equities these are? Like maybe one or two? You can give me maybe your top 3 across Africa today.
I wouldn't be able to mention names, but I think what I can say is we're seeing. Actually, I think there's value in most African countries. To be honest, it just depends how you evaluate the sectors and which sectors are actually doing well. So, can touch on, let's say, Nigerian banks, for example. Right now, they're going through a structural adjustment where they have to increase their loan to deposit to about 60%. And so once banks correct that and we're able to see sort of an adjustments around there, and given that
uplift expected,
there could be an uplift expected, especially given that they are one of the most discounted banks.
So Nigerian banks over Kenyan banks for now?
It's very tough to say. It's very tough to say, because fundamentals are changing as well. I think what's constraining perhaps maybe the banking in Kenya is the fact that maybe they're not as discounted as Nigerian banks. And also with the caps in place, it does. Yeah. There are various sectors. If you look at consumer, if you look at manufacturing and banking, there is value. There's
some value there. So it's up to you to just do your research and decide what kind of risk you're willing to sit on and invest your money. We're coming to the end of our show. Is there anything else that you think is pertinent if you're looking at investments across SSA? And I really want you to tell us, is Kenya doing better or worse than the markets that you look at?
Yeah, I think Africa in general has been punished by global factors. And there is value here.
So there's value.
There is value.
And is Kenya doing better? Or where would Kenya rank? Would it be in your top 3? Would it be number 1 in terms of allocating funding?
I think Kenya will be in the top ranks right now in terms of allocation.
So what would be in the top ranks?
I think what we're seeing value, if you look at Egypt, despite what we've seen sort of like political tensions over the last 2 weeks with but I think fundamentally still remains strong. So I'd say Egypt is a good forerunner around
in any country in the East African community?
East African, perhaps It's a tough one. It's a tough one.
It's
But
a
I do
tough
think.
one, okay.
But I do think Kenya.
Kenya.
Kenya has value. Depends on the stocks, especially you did touch on this dividend yields.
Dividend yields.
We're seeing
okay.
record dividend yields.
Wow.
We're seeing some of the stocks giving us upwards of 8%.
Okay,
so
interesting.
you're getting almost a similar return in terms of government.
All right.
And some stocks. So
Okay.
there's value there.
So there's value there. So we'll leave it at that. So there's a lot happening. Most of the things that are averse to Africa are extrinsic to Africa. What happens in the US actually has a double down effect on Africa. But that said, there's still some opportunities in some of these countries, some opportunities in Egypt with regards to fixed income. When you come back to East African community in Kenya, dividend yields would be your best bet. But if not that, fixed income opportunities are actually abound and you can get a good return. And don't forget, if you just have a random 20 million shillings lying around and you want to invest in the Euro bonds and get some double-digit return, you probably have an opportunity there. If not, then you're certainly left with the fixed income, equities, and real estate, and you have to choose one of these. Thank you for joining us. That was a very insightful conversation we've had with Mr. Charles Miano, who is an equity analyst at Nabo Capital. We'll be back tomorrow once again at 2:30. Good afternoon.